Well, so think back on the first time you bought Bitcoin. I don't know when was the first time you bought Bitcoin, but the first time I did was I wired some money to an unknown bank in Japan, which holds Bitcoin, the non-Gox Bitcoin into custody. That was degen as like you're literally wiring your own hard-earned money into an offshore bank that you have no idea about. And I'm sure a lot of people did this in the early days. So in my mind, the early adopters of Bitcoin were degens. Everything that I can think of that's happening in crypto, the first adopter of everything, of all these different verticals are degens.
All right, guys, bang, bang. I've got Qiao here with me. Qiao, I thought a great place for us to start is you recently wrote this excellent piece all about degens and how they are the pioneers of crypto. And I pulled out three specific parts of what you said, and I just want you to expand on it. The first is speculation is the most contrarian idea among crypto VCs, yet the most consensus idea among crypto users. Explain that.
I just noticed that, again, this is not all VCs, but many VCs are pretty disillusioned with the current state of crypto, which is obviously very speculative. But at the same time, if you look at Twitter, if you look at people around you, everyone uses crypto as a speculative tool. So it's the most consensus idea among the users, but the most contrarian among the VCs.
Why do you think it is that speculation is looked down upon, even though that is the thing that is bootstrapping some of these networks, right? And I say that from a perspective of I've gotten plenty of backlash when I talk about traditional finance. It's gambling, right? The stock market is a casino. Yes, some people are much better, right? You can be a professional poker player and go play in the casino, or you can be a drunk, 21-year-old idiot and go play in the casino. But either way, you're playing in a casino in Las Vegas. Same thing in the stock market. You can have uneducated people or highly sophisticated people. It feels like that's the same thing that's happening in kind of Bitcoin and cryptocurrency as well.
Yeah, I mean, I have some hypotheses, but I feel like in general, the reason why speculation is so looked down upon is because most people think it's a zero-sum game, whereas in venture investing, people think of it as a positive-sum game, right? Like the average VC makes money, but the average degen loses money, or loses money after transaction fees, right? Mm-hmm. So maybe that's why. But again, like I think you have to take into account the fact that there's people around the world who are living paycheck by paycheck, and they spend their entire childhood hustling for every single way to make money. And I personally don't see anything wrong, any moral issue with speculation, right? Like people have to make money. And in fact, crypto is the most open and transparent casino out there. So I don't see that as a moral issue at all.
I actually would take a step further. I mean, people are speculating with their time when they go and work certain jobs. They're definitely speculating with their money, including they're speculating with their money when they buy bonds, if they hold cash, if they buy real estate. And so the interchangeability of the term speculation and investing, I think, is kind of one group of people saying, hey, we're sophisticated. The other group of people saying, and saying to the other group, you're not sophisticated. But there are plenty of people who think buying a lottery ticket is investing, right? I don't know if I would agree with them, but it is kind of maybe a little bit of nuance around words. Now, a second thing that you said in this piece is that degens, which is a label or a name that is thrown around quite often, usually in a pretty lovingly way in crypto, but degens is synonymous with early adopters, which changes the framework a little bit of how you think about these people. Explain this one.
Well, so think back on the first time you bought Bitcoin. I don't know when was the first time you bought Bitcoin, but the first time I did was I wired some money to an unknown bank in Japan, which holds Bitcoin, the non-Gox Bitcoin into custody, right? That was like 10 years ago. That was degen as fuck. Like you're literally wiring your own hard-earned money into an offshore bank that you have no idea about. And I'm sure a lot of people did this in the early days. So in my mind, the early adopters of Bitcoin were degens. And then I'll give you three other examples. One is those NFTs, right? The JPEGs, the penguins, the ducks, the dogs, right? The meme coins. People think of, or VCs actually think of NFTs as a way to create new IPs, right? To compete with Pokemon, to compete with Hollywood, etc. But if you look at Penguin, the Pudgy Penguin, for example, the JPEGs have no utility yet, except for showing them on your Twitter, putting them in your Twitter PFP. And so the first people who buy the Penguin JPEGs, they're degens. They're literally buying JPEGs that have zero utility, and they're just buying JPEGs. They're just buying the JPEGs for the speculation, for the upside, right? So that's one example. And then another example is Helium, right? The decentralized telecom network, right? The first time you buy Helium hotspot or hotspots, it costs about $1,000, and in return, what you earn is a very illiquid token. That's the Helium token. Who in their right mind would do this, right? Again, it's the degens. And then people would argue, look, we still haven't seen a true non-speculative use case of crypto yet. But stablecoins are actually the adoption of stablecoin is taking place all around the world at a mind-boggling pace. And guess what? Even the first use case of stablecoin was also very speculative. People use stablecoin to do cross-exchange arbitrage and to do leverage trading. So everything that I can think of that's happening in crypto, the first adopter of everything, of all these different verticals, are degens.
When I see stablecoins being spoken about in terms of speculation, I don't think people think about it that way, but it is a tool in the toolkit of a speculator, is basically the argument you're making, right? And so you may not be speculating on the asset itself, but it is a tool that is used in the process of speculating. No different than the people who go and go west and try to dig for gold. They need a shovel, right? And so no one was speculating on shovels, but it is a crucial component of the process of speculating, which I think is, a really interesting way of looking at this. The third thing that you said is the decentralized utopia needs the open-minded, risk-seeking, thrill-seeking pioneers. And I thought this was interesting because when most people hear risk, they run away. When they think of thrill in financial markets, they run away.
Yep.
Are you making the argument that these people are running towards risk? They're running towards thrill. And actually, that's an important part of being a pioneer, is being able to go and do that?
Yeah. And the analogy I draw here is the early internet days, right? So in the 1990s, the first users of internet used the first email clients or those forums before the likes of SSL were developed, which is a security standard protocol. It just so happens that the internet is the information superhighway and crypto is the financial superhighway. So by definition, the first few adopters of crypto has to be those super risk-seeking early adopters, pioneers, right? They seek risk, they seek thrill. And without those, risk seekers, we actually wouldn't know how truly scalable and safe our infrastructure is, right? Because all these degens that got hacked or paying super high gas fees, without them, we wouldn't know how bad our, the layer ones or the oracles or the bridges are. And these degens are the people that prompted our entire industry to focus on building better infrastructure.
Now, you've also written a piece that basically looked at Hayek, and you made the argument that Hayek's vision of an alternative currency may actually be more akin to stablecoins than to Bitcoin.
Yeah.
Now, I don't think you're saying Bitcoin is bad. I actually think you're saying the opposite, which is like Bitcoin is great. And it definitely fulfills some version of his view of the world. But explain a little bit the nuance here. If we now have, to some degree, a decentralized digital currency that's completely outside the system in Bitcoin, and then we have this almost like layered version of fiat currencies and stablecoins, and both of them seem to be putting pressure on the legacy system, but doing it in different ways. And so how do you view maybe what Hayek was really saying is the potential solution, and then how both of those fit into that framework?
Yeah, so that post that I wrote was 6 years ago. I don't even remember exactly what I wrote, but the analogy I draw there was the exact mechanism of Maker, the DAI in the Maker DAO system resembles the ducat, which is the currency that Hayek proposed decades ago. But Bitcoin and stablecoins play very different roles today, empirically, right? Bitcoin is a fiat debasement hedge. It's not an inflation hedge, but it's a debasement hedge. Whereas stablecoin, we see people around the world, especially those in Latin America, Africa, Middle East, and Southeast Asia, extremely strong demand from them for the digitized dollar, right, which is stablecoin. And in many ways, stablecoin is better than Bitcoin. And there's pros and cons, of course. But the ways in which it's better than Bitcoin, obviously, it's one of them is that it's less volatile, right? People want to hold a stable store of value. And so as a result, they also use stablecoin to pay each other more often than using Bitcoin. Or actually, I don't know that for sure, but the trend is certainly trending towards using more stablecoin versus Bitcoin.
It's interesting. I do believe that stablecoin settlement volumes is higher than Bitcoin settlement volumes. They're both growing, right? Which I think is a net positive tailwind for the industry. But it does feel like stablecoins for medium of exchange. Again, what are they doing with it? Very unclear. There are some questions about the metric itself in terms of when you're actually selling or buying. Is that getting caught up in some of the transactions? Put all that aside, like it's definitely a popular use case. It seems to have product market fit to use these stablecoins for medium of exchange. Now, with that said, a question that comes to mind is when Hayek is talking about this, he was talking about one currency. Maybe actually, should we have two? Like, if you talk to Michael Saylor will say, well, I think that Bitcoin is going to be this amazing store of value and it's going to serve as digital gold and the enemy is gold, like, drop your gold, buy Bitcoin. And at the same time that Bitcoin is growing in popularity and adoption and price, the dollar is going to continue to strengthen. And so gold loses and weak fiat currencies of, non-US nations, they lose. Maybe stablecoins actually are what he's talking about there in terms of US dollars. It's just in a digital form, right? It's the same dollar, same monetary policy, but it's Bitcoin and its dollars that end up strengthening. Is that kind of your view? And then in terms of solving for Hayek's, kind of utopia vision, we actually end up with two currencies rather than one?
Possibly, because by definition, the problem that stablecoins still have is fiat debasement, right?
Yes.
US dollar just keep getting debased again and again over a long period of time. And so you're going to need a hedge against that, and that is Bitcoin. So it's very possible that both will exist. And, obviously, all reserve currencies, all fiat reserve currencies come to an end. So maybe in 2 to 3, 4 decades from now, stablecoins, US dollar stablecoins can come to an end, right, in terms of dominance, but that'll take a long time.
Yeah, it's fascinating to think about. You've tweeted recently about African startups using stablecoins and the popularity there. I was shocked at maybe the responses that people had. I think they were surprised. Some of them didn't believe it, right? But pretty much any company that I talk to anywhere in the world, from Argentina and Venezuela, where inflation is ravaging these economies, all the way to economies even in the United States, or companies even in the United States, where sure, we've had some high inflation, but for the most part, people still have access to dollars. Stablecoins efficiency, speed, low cost transactions seem to be very attractive. How do you see stablecoin adoption right now? If we took a snapshot of kind of the static environment, is this something where it's just these degens and kind of crypto forward or tech forward, or do you actually see it seeping into what I'll call kind of the mainstream economies, maybe outside the United States?
Yeah, so I'll throw some numbers. Last year, this is according to a report by BH Digital, $14 trillion worth of stablecoin settled on chain. And that number surpassed the dollar amount that PayPal handled last year. It's mind-boggling. Now, probably, we don't know this for sure, but probably most of that volume is related to trading because people need to move stablecoin across exchanges and then trade in those exchanges. But the percentage of non-speculative usage of stablecoin is probably growing in the emerging economies. So in this recent chain analysis report, which analyzed the adoption of crypto in Africa, Nigeria, South Africa are probably the top two. I forget the number three, but Nigeria, South Africa are the top two. And coincidentally, most of the African startups that I've spoken with, that I mentioned in that tweet, are also from these two countries. So my empirical experience matches what the data shows. That's in Africa. People there's a massive shortage of dollar right now in Nigeria, for example. And that's one reason why people want the digital dollar. But another reason is, there's still a lot of migration happening in Africa. Africa is extremely fragmented with a lot of countries. There's a lot of migration between them. There's a lot of migration between Africa and Europe, for example. So one of the startups that I talked to recently is they help Nigerians for studying in Turkey to do cross-border payment. So because of the migration, there is a lot of demand for remittance products, cross-border payment. And by the way, Turkey is also another really interesting country where stable or crypto is happening. Some of you might have gone to DevConnect recently, but the startup that I talked to, they're not based in Istanbul. They're based in a smaller city in Turkey, and they told me that in that city there's more crypto physical shops than bank ATMs. It's crazy. So that's Turkey. And then Latin America, mostly Argentina, Venezuela, and Colombia. Brazil, less so because Brazil currency is relatively more stable than Argentina, for example. And yeah, those are the regions I'm mostly excited about.
It feels like, for a long time when people talked about Bitcoin or cryptocurrencies as a broader industry, it was kind of like, I think Alex Gladstein from the Human Rights Foundation calls it financial privilege. We go to the ATM, money comes out, right? The dollar, yeah, it gets debased, but not nearly as fast as elsewhere. And so it's hard to see some of the value proposition. But if you go to Turkey, Lebanon, Argentina, et cetera, it becomes very obvious. And it's not just what I'll call like the economic view of let me get a bunch of data and see how high is the inflation rate, or let me see what some of the interest rate decisions are. It's also simple things like, hey, I need to go to a physical store. I've got a friend who he worked at Uber for a while, and one of the things that he was tasked with was fraud prevention, specifically in Southeast Asia. And so one of the problems that makes it so difficult is that there's a lot of cash payments. Physical cash payments. Well, how does Uber make sure that the driver actually got paid? How does Uber get their cut, right? And all these kind of nuances to it. And it feels like that's really what's happening is we're almost like modernizing the infrastructure to some degree of some of these locations and these geographies. That is as simple as moving from a physical, we're skipping over electronic and we're going right to digital. And so that disruption ends up actually helping them leapfrog. And we've seen this where, I don't know, in Nigeria, for example, there's a very young population, very kind of high penetration of mobile phones and internet access. They never got to kind of 2.0 of the internet. They went from basically 1.0 to now they're jumping into 3.0. And that 2.0, part where they were behind, in some cases, they may actually be ahead of the US, it seems like.
Today's episode is brought to you by Trust and Will. I've gone through a number of different changes in my life over the last few years. I got married, I had a kid, and I had to start thinking about how could I ensure that my wife and my child would be okay if anything ever happened to me. That's where trust, wills, and estate planning come into play. Now, most people, what they do is they get introduced to a friend, an uncle, or someone in their local community. It tends to be someone who's really expensive, a lawyer, an accountant, or somebody who does estate planning, and they just simply are using a one-size-fits-all template and just telling you, pay me thousands of dollars, and I'll use the same thing for you as the guy down the street. But that's not what Trust and Will does. They have a trusted online estate planning product that starts as low as $159, which allows you to now protect your legacy from the comfort of your own home. Leverage their excellent customer support, available via phone, email, or chat. They have thousands of 5-star reviews and a rating of excellent on Trustpilot. It takes most people 20 to 30 minutes to complete their estate plan with Trust and Will. And not only that, but if you go to trustandwill.com/pomp, you'll get 10% off. Plus, you'll get free shipping of all your estate planning documents. So go to trustandwill.com/pomp and make sure you get an estate plan in place. Whether it's for you or one of your loved ones, having a trust and or a will can literally be the difference between someone being taken care of and someone not. Go check them out today at trustandwill.com/pomp.
Yeah. This leapfrogging phenomenon is very interesting because basically you're saying the 2.0 is not 10x better than the 1.0, but the 3.0 is, and therefore people just go straight from 1.0 to 3.0. There's also a phenomenon like this outside of crypto. So for example, in China, 2 to 3 decades ago, people used physical cash for day-to-day payment. And then at some point, when mobile internet happened, people started using WeChat and use WeChat to pay. Leapfrogging credit card. Credit card is not a thing in China, but credit card is extremely widespread in the US, right? But not that many people use Apple Pay. So Apple Pay is like the next level, the 3.0, so to speak. Not that many people use Apple Pay because Apple Pay is like maybe not 10x better than using a credit card for a lot of people. Whereas in China, people just went straight from physical cash to mobile payment.
When you see that, is it the technology or is it the user experience? And obviously they're intertwined, but one of the things that's interesting to me is, I don't know, I'm probably like habitually trained at this point. Bill comes, I reach for my wallet. I don't reach for my phone, right? And like, as stupid as that is, it's almost like a user behavior thing that you have to change more so than, is the technology or better? Yeah, like obviously the technology is better, but there is friction or there's a hurdle to get me to reach for my phone versus reach for my wallet when the bill comes or when I go to pay for something. And it feels like that's really where the opportunity is.
Yeah. Yeah, the UX needs to be 10x better. And obviously it's the technology that enables that. I'll give you a related example of in crypto, actually. So Metamask, yesterday, Rainbow launched a sort of a vampire attack on Metamask. Basically, they tried to airdrop points to Metamask users in order to entice them to use Rainbow instead. I've always used MetaMask in my entire life for the last 5 years, despite all the UX pain I've gone through, like hundreds of failed transactions, et cetera, et cetera. It's really, really painful, but I continue to use it. And the reason why is I've never lost money on MetaMask. I've never been hacked on MetaMask. So I trust the security. So basically the UX of MetaMask is bad, but the alternatives are not 10x better for me to switch. And so that goes back to your point about whether or not mobile phone is 10x better enough than credit cards to entice you to use it.
Let's talk about a recent development. I, through one of the funds that I raised early on, have been an investor in Coinbase for a number of years. It went public. I think that people looked at it very much as the leading US-based regulated exchange. Obviously, there's been some appetite for that from public markets, but it was essentially looked almost as like, the New York Stock Exchange or the NASDAQ for crypto. Mm-hmm. Over the last couple of years, or maybe even last 18 months, I think you and others have called out, they have done a fantastic job of morphing themselves while still keeping that business, still, kind of being a dominant US-based regulated exchange. They've become much more crypto native. They've got the wallet, they've got the L2, all this kind of stuff. Let's talk about Base for a little bit. And maybe you can kind of talk through like, what is Base and why do they seem to, one, being successful with it, but also two, it feels like, if I talk to Will Clemente from Reflexivity Research, he'll say Wall Street is going to be completely blindsided by what is happening in Coinbase's crypto native side because they're only evaluating trading fees and kind of the Web 2 type business.
Yeah. So Base is an optimistic rollup on top of Ethereum, and Coinbase is behind it. Now, I don't know exactly what the relationship is structured between Coinbase and Base. But I do think that Base will be a top 3 contender for the most important rollup in the coming cycle. And unfortunately, I don't think they will launch a token. So I don't know what's the best way to gain exposure to Base.
Is
That
it just
said,
by Coinbase? Is it just by Coinbase stock?
The thing with Coinbase is, it has a lot of other things, right?
Yeah.
So it's not the purest form of bet on Base itself. I mean, I have an idea, but it's almost embarrassing to say. But my idea is to buy the most lindy meme coin on Base, and it's Toshi. It's a cat meme coin on Toshi. There's not a dog coin yet, but there is a cat. So
explain that a little bit more in terms of why, because I think people are fascinated. Again, we kind of get into the degen speculative, ground here. Buying a meme coin on top of Base, you think is the best way to play Base potentially being successful. Why?
Yes, unironically. And I say this both from a theoretical and empirical point of view. Theoretically, meme coin, I consider meme coins as crypto is essentially tokenized mindshare, tokenized attention, right? You have all these different coins that in theory have zero utility, but why are they commanding like $10 billion of valuation, right? It's because of the attention behind them. And memes like Doge, Shiba, these things, Bonk, on Solana, these things, they capture a lot of attention. And that's why they're able to command an extremely high valuation. And so if Base, the L2, the rollup doesn't launch their own token, the most the bet that will capture the most value, that will capture the growth of Coinbase, I think, is a meme coin, for better or worse.
I mean, so far that has been a huge part of crypto in general, and I would even argue, I've had multiple people that are well known on Wall Street like roll over and basically want to kick me out of their office when I've been like, well, Bitcoin has been the most successful meme coin. Right. In the sense of that there is this culture, there is this kind of mimetic aspect to it. But Toshi is obviously very different and an interesting idea. Talk a little bit more about Base itself in terms of just like becoming this like de facto chain for, I think you view it as like a regulated DeFi chain. What exactly does that mean?
That's part of it. I'll explain. But Base is probably the most interesting layer 2 because of the fact that it's the Coinbase is behind it. And the result of that is, number one, Coinbase has over 100 million KYC user. And it would be a lot easier for them to put that identity, that KYC identity on chain onto their own chain than all the other chains, right? The other chains, they don't have this identity layer. So the moment you have KYC on chain, you can do some really interesting things that other chains cannot do. For example, RWAs. So real world assets, for example, tokenized US Treasury, tokenized US stocks, tokenized properties, that kind of stuff. Because these things typically require KYC. Some of them require accreditation. And in order for their users to be able to access these instruments on chain, right? And it's not easy for other chains to do it. So and therefore it's not easy for other chains to launch RWAs. Like this kind of products, RW product startups, they have extremely high startup costs due to compliance, due to legal, etc. And Coinbase solves some of that. So that's why I find Coinbase really interesting. So the first reason is the identity layer. And the second reason is even more obvious, which is the fact that Coinbase has a huge distribution. They can quite easily direct their existing centralized exchange users onto their own chain via Coinbase Wallet, for example. So the distribution and the brand matters a lot.
Now, do you think that this is, when we talk about real world assets, are we talking about them literally, putting real estate, putting stocks, things like that? Or they're almost like crypto native real world assets? It's something different.
No, it's literally tokenized stocks, real estate, properties, not crypto native.
And what is we talked about user experience in terms of, when the bill comes, I got to grab my wallet versus my phone. What will it take to convince Wall Street or traditional finance folks to buy the tokenized version?
They're not going to be convinced. They're not going to be convinced. The reason, so by the way, I've been skeptical of real world assets for many years until maybe 3 months ago. And I had an epiphany, which is that the first source of demand for RWAs is actually crypto natives. And the reason for that is if you look at the market, the total market cap of crypto today is like 1.5 to $2 trillion. So there's $2 trillion worth of on-chain wealth. And at the same time, it's likely that this will be the last cycle, the last 10x cycle, right? So Bitcoin, Ethereum have maybe 10x more to go before they reach more of a steady state. So at some point, the crypto natives, all these $2 trillion worth of on-chain wealth, crypto natives, they need new ways to diversify. They need to diversify their wealth outside of crypto native assets. And RWAs are a pretty obvious way to do that, to enable diversification for the crypto natives. So basically, RWAs solve the problem of diversification for on-chain degens or people living in emerging markets needing new assets. And by the way, RWAs might still sound controversial to a lot of people, but if you really think about it, stablecoins are a form of RWAs. It's tokenized US dollar.
So many people either were not around or have forgotten, but back in 2017 and 2018, I would talk quite a bit about tokenize the world, right?
Yes.
And this idea was basically every single asset is going to get tokenized and brought on chain. I came to two conclusions during that time period. One was this is so far away that I should just shut up and I'm going to be saying the same thing for literally a decade before this happens. Yeah. And so it's always easier to see where the world is going, but it still takes time to get there. But two was I thought that we were going to have to see the current generation of decision makers at the Wall Street firms leave and have the young people assume their positions of decision making and capital allocation, and then it would happen. It's an interesting nuance, and actually, I could be convinced that you're more right in the sense of no, it's not even the Wall Street firms. It's actually just the crypto natives end up actually being that first group of early adopters, and then to some degree,
against the degens.
Yeah, Wall Street has to follow the degens, but the degens are the pioneers.
Yep.
Yeah, it's super fascinating. The last thing I want to talk to you about is artificial intelligence in crypto. Okay. I have for a long time said that Bitcoin is an automated central bank. I don't think that means that it's artificial intelligence. I don't think that there's machine learning or anything like that. But to a degree, it is this fits in very nicely into our worldview of what I'll just call automation in general, right? And so artificial intelligence is a piece of that, machine learning, but also crypto assets as well. How do you see artificial intelligence and crypto kind of intersecting, or where do you think the areas of opportunity are?
Yeah. Okay. So first of all, I have no idea where AI will be going, because AI is just happening as fast as crypto. And I spend all my time in crypto. And so there is no way for me to truly deeply understand AI, but I do have some hypotheses. One idea is right now there is a massive shortage of GPUs because everyone needs GPUs to train models. And so where crypto might come into play is to create decentralized marketplaces of GPUs where the consumers like you and I, we have idle GPUs on our laptop. If I'm not using my laptop, maybe I can contribute my GPUs to this network to help others to train their models and earn some tokens and money in return. But it doesn't have to be a consumers. It could be some idle GPU sitting in a big data center as well, right? So that's one idea. Obviously, there have been a few startups that got tens of millions of funding, pre-product market fit, pre-product actually. So I think a lot of people actually see this already as a big opportunity. Another way where crypto and AI could intersect is some time ago, there was a pretty big hype cycle around AI agents. And the way we can define that is AI agents that run autonomously rather than like a SaaS product or something, right? And so if AI agents, by the way, I haven't seen any truly useful AI agents yet by that definition, but if AI agents will happen, then at some point they need to make payments. They need to make financial transactions. And guess what? Crypto is the most compatible form of payment and custody for AI, because crypto is permissionless and it's programmable, and so is AI.
It's almost like what you're saying is whether it's Bitcoin, stablecoins, maybe even something else, it's money for machines.
Yes, 100%.
Yeah, and you need the automated transactions. Like for a long time, I've always said there is this belief that everything will become more and more automated, and you will trust the algorithms. Obviously, you trust Google to tell you where to go. You trust Spotify to tell you what music to listen to, whatever. But you can't use 2-day settlement time, so fiat, right? And so really, you're saying we need a different asset with a different settlement time to be able to unlock automation.
Settlement time matters, and programmability also matters. So imagine you have a personal AI assistant that runs autonomously, and you ask the agent to hire more specialized agents to do specialized work for you, to, I don't know, schedule meetings, that kind of stuff, right? And then your personal agent will need to pay the specialized agent. And guess what kind of money they're going to use to make that payment? It's going to be crypto, because it's programmable.
Mm-hmm. Yeah, it's super interesting. When you almost think about, I for a long time have I think I've even written pieces years ago about this like money for machines idea. But if you almost put together, how do I want to invest in artificial intelligence? You can go invest in large language models and things like OpenAI, whatever. Then there are maybe like products and services that are built using AI and kind of like end consumer opportunities. But maybe there is an even bigger opportunity. If you really want to own the payment rails of artificial intelligence, then you need to be investing in crypto. And if you were to put these investment opportunities next to each other, which one is more asymmetric, right? Is there more kind of value to be captured by investing in what right now is being categorized as AI, or is it actually to be allocating to kind of crypto, and that's where the value gets captured?
By the way, you'll be surprised how many stocks they're actually AI stocks, but people don't think of them as AI stocks yet. Because I spent a lot of time looking at AI stocks as well, especially semiconductors. There are quite a few of them that are, to me, really undervalued. And like everyone is talking about NVIDIA. By the way, NVIDIA is the purest form of AI bet, but there's many others that are doing AI related stuff, both on the hardware side as well as application side.
Talk us through maybe a couple that you're like, hey, these are AI companies, but no one has realized it yet.
This episode is brought to you by Cal.com. What do I have in common with Chad Hurley from YouTube, Toby from Shopify, and Alexis from 776 and the co-founder of Reddit? We all use Cal.com instead of Calendly, and we are all early investors as well. Cal.com is leading the charge of scheduling platforms in the open source sphere, offering you the chance to harness the efficiency previously reserved for elite corporations and tech gurus. If you like to have your calendar organized and be able to have an efficient exchange when scheduling, but you love all of the benefits of open source technology, then Cal.com's for you. They are transforming sophisticated calendar management into an accessible tool for all via a user-friendly interface. You can customize it and you can make your calendar work for you. Use code POMP for $500 off when you set up your team with Cal.com today. Again, go to Cal.com, Cal.com, and use code POMP to get $500 off when you sign up. Cal.com, an open source tool that allows you to take back control of your calendar, be efficient when scheduling, and make sure that no one can steal your time.
Snowflake is one that's more on the infrastructure side. So they provide database infrastructure. And at some point, people are going to realize a company like this is obviously an AI play. And there's a couple of semiconductor companies that are doing more and more stuff in AI. They're currently generalized semiconductor, but obviously the AI force is so strong that it's going to convert them into doing more and more AI. So ASML, ACLS. These are the semiconductor companies that don't produce or don't fabricate the chips themselves, but produce the tools, the equipment for other fabs to create chips. So the supply chain goes like this. You have ASML, ACLS, and others. They produce the manufacturing equipment, and they sell the equipment to the likes of TSM, so Taiwan Semiconductor Company, and Intel. And then these two, they have fabs, so they have like physical places where the chips are manufactured. And they manufacture the chips for NVIDIA. NVIDIA is fabless. So NVIDIA designs the chips for OpenAI, for example. So that's how the supply chain goes. And the most surprising thing about the hardware AI companies is that their profit margin is so incredibly high. It's like 30%, 40%, or even more. And what that tells me is that their tech has extremely strong moat. They're probably 10 years ahead, 5 to 10 years ahead of their competitors. It's very hard for competitors to outperform, to outcompete them. That's why these hardware companies are so interesting to me. They're both undervalued and have extremely high profit margin.
Now, are there companies that I think CoreWeave was a big one in crypto that they had a bunch of infrastructure, mining equipment, et cetera. They pivoted very nicely. Are there other companies that maybe are getting categorized right now as crypto companies that you actually think are AI companies?
There are a lot of crypto protocols that are doing AI related stuff. But to the best of my knowledge, there is none that is production ready. And
got it.
That is simply because AI is already hard enough. And now you're slapping decentralization on top of it. You have two really hard problems to solve at the same time. So it'll take them quite some time to get ready.
When you see capital flows, to me, it feels like there was tons of capital that poured into crypto, right? More broadly, 2020, 2021, massive bull market. It's almost like the world, it's like that meme, the guy turned his head and all of a sudden AI took a lot of the capital flows and crypto kind of fell out of favor. In the future, is it just capital will flow into kind of, pioneering tech and crypto and AI will be side by side? Or do you think we'll still kind of get this oscillating back and forth between two industries that maybe are, tangentially related, but people will still keep them in separate buckets and kind of go risk on crypto and then pull back and go risk on AI?
I have no idea, but empirically this year, Coinbase, the stock, outperformed NVIDIA. And by the way, NVIDIA is the #1 best performing stock in all of S&P 500. It's up like 250% or something. And Coinbase is up like 300. So both went up. There's no capital flow that went from crypto to AI or vice versa. And so whether or not this holds in the future, I have no idea. But I do think that in general, the money will flow into high, frontier technology sectors. And by the way, here's another thing I realized recently, which is, I wish I realized this earlier. You have all these macro LARPs that talk about how, only 5 stocks in the S&P 500 drive all the returns in the S&P 500, right? And the remaining of the 495 stocks haven't moved this year. But it turns out that maybe public stocks also follow venture returns profile, right? You have 500 stocks, but maybe only a few of them drive all the returns, just like in venture. And this certainly was not the case like 50 years ago. But today, it could very well be that is the case because we're literally nearing the singularity. Like you have a bunch of technology sectors that are just evolving extremely fast. And all the top 5 or 7 stocks in the S&P 500 that are driving all the returns are tech stocks in AI, and basically all of them are AI if you think about it, right? Like Facebook is AI, Google is AI, Microsoft is AI, Tesla is AI, NVIDIA is AI, all of them are AI, right? So maybe public markets also follow venture returns.
I'll take it a step further. I have a letter to investors sitting in my drafts that is called the Power Law Era. And it talks about this, but not just the 5 stocks in the S&P 500. It does 2 things. One, it looks at all markets, across market cycles, across asset classes, et cetera, are power laws, and actually have been for a long time. People just didn't realize it. And I got this idea because there are 2 brothers from New Zealand called the Chandler brothers that a lot of people don't know about. But essentially the story is their parents started the largest department store in New Zealand, kind of, the Neiman Marcus, if you will, of New Zealand. And they went to college. And when they came back, they were like, hey guys, we don't want to run the department store, but like we like investing. Why don't we sell the family business, get the cash, and then like we'll go invest. They did. When they sold the family business, they got about $10 million at the time. And in a 20-year run, they turned $10 million into $5 billion. So no outside investors, just pure investing. And when they looked at all of their investment portfolio and returns, it boiled down to about 5 investments they made over those 20 years that drove all the returns. Mm-hmm. And so when they looked at it, they realized about 5% of all the decisions they had made drove 95% of the outcomes. And so they became very interested in this idea of power laws, et cetera. And so if you then go and you actually extrapolate this outside of financial markets, in your life, power laws dominate everything, right? You probably have 5 to 10 personal relationships that actually are the outsized, kind of contribution to happiness or to meaning. If you think of, trips that you make, right? If I ask you, hey, where have you, traveled to? You probably will think of 3 to 5 trips that you've made in your entire life of all the days you've been on Earth, right? And those are the things that you kind of remember. And so it is this very weird dynamic where like maybe actually power laws are the default across financial markets, across life, across all these different things. But because the human brain really can't think in exponentials and understand power law, we just assume it's the opposite. And so what you're really getting at here is like we're uncovering in some weird way because of our access to information and also the severity now of underperformance and outperformance, what's actually been true for decades in financial markets as well.
And by the way, this is why the hodlers, Bitcoin hodlers, were so prescient. Like if Bitcoin goes up 2x and you sell it, you're never going to be able to capture this power law. In my 10 years in crypto, basically 95% of my money comes from just holding for 10 years and never selling. So.
I wrote a piece earlier this week, and I said that Bitcoin essentially took financial discipline and codified it by really looking at, if you look at, to use Bitcoin, but I think across crypto, this ends up being true. All of the great details and nuance of great investors are part of the Bitcoin culture. Warren Buffett, buy great assets and never sell them, right? Dollar cost average, right? Don't look at the price, just buy consistently over a long period of time. When things go on sale, buy more, right? I mean, you just kind of look at all these different components and you realize like, wait a second, in some weird way, crypto, although there is speculation, although there is Degens, although there's all these things that people kind of, thumb their nose at, it's actually taught an entire generation how to be great investors. And that I think kind of blows people's mind. And if you go and if you walk into a hedge fund on Wall Street, like, yeah, the crypto people actually understand investing better, you'll get thrown out. But, if you dollar cost average since the beginning of January 2021. So basically you said, I rode all the way up the market and I rode it all the way down and back to where it is now. And you were buying Bitcoin when it was overvalued. You were buying it when it was undervalued. You're up like 50% by simply just dollar cost averaging on a daily basis. And so it is a very weird phenomenon.
100%.
What are you most excited about, let's say, in this coming bull market?
I've already mentioned a few: payment, stablecoin, RWAs. They're all under discussed just because speculation is what drives all the attention. Stablecoin is boring. RWA is boring. They're boomer even, but I'm really excited. I think both are still fairly contrarian. Base, I'm excited. Base, again, probably top 3 contender for the most important layer 2 on Ethereum. Solana, I'm very excited. Obviously, there has been a lot of hype recently, but but Solana is fundamentally different from Ethereum, making good trade-offs. I'm excited about that. I'm excited about meme coins. I'm excited about penguins, pudgy penguins on Ethereum, MATLADs on Solana, Bonk on Solana, Hoshi on Base. All these Degen stuff. I'm excited. I'm excited about Coin, the stock. Oh, I'll throw another name, Circle. If Circle successfully IPOs next year, I think Circle will be the purest form of bet on the growth of stablecoin around the world, because that's literally the only thing they do, USDC. So fingers crossed. I was an early investor in Circle, by the way. Fingers crossed on them successfully IPO next year. What else?
That's a pretty good list.
Yeah.
That's a fantastic list. Qiao, where can we send people to find you on the internet or find out more about Alliance DAO?
You can find me on Twitter, QWQIAO. So my initials, my first name. Alliance DAO, our website is alliance.xyz. Yeah, that's it.
Awesome. Well, I really appreciate taking the time to do this. Your tweets are awesome. They make me think every time you tweet. So please keep it up, and we'll definitely do this again in the future.
Thanks for having me.